Hi, my name is Chris Liddle, and I am the host of The Lifestyle Chase. In 2018, I started this show to have meaningful conversations. I've interviewed over 100 different people, both in and out of the fitness industry. This podcast is something I'm incredibly proud of. Welcome to Season 4. Thanks for joining me.
All right, so we are back with Andrew Hallam. We've had a few segments to the show so far, so if this is the first one you're tuning into, go through the episodes and check out the other ones, because we've been having some great conversations. I'm going to tee up the topic of cryptocurrency and the future of banking, and I'll kind of give you some backstory to it. So in our previous little segment of the show, I talked about one of my training clients, and him and I have conversations on finances all the time, and he gives me insights on cryptocurrency, investing, financially responsible spending decisions, and to give you some insight. This client of mine has been very successful with his own investing, but if you looked at the car that he drives, you would never guess. He has like an old Pontiac. I think it's discontinued. I think it's on its fourth engine, and he doesn't try to show off with the clothing that he wears or the vehicle that he drives, and he teaches me how to save money on winter tire purchases. So the things that I've learned from him are endless, which has made me excited to have you, Andrew, on the show, because it's going to give me even more insights. But with that being said, when I bring up the topics of cryptocurrency and banking, what are the first things that come to mind for you?
Well, one is, I think, just the wild popularity of cryptocurrencies right now. There are more cryptocurrencies than there are stocks on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange combined. So there are about 7,000 cryptocurrencies now, and they've all been rising exponentially in value. I can't actually see the future. Of course, nobody can. For me, in terms of my personal investing, I see cryptocurrencies as a little bit more of a speculation than an investment. And so I'll explain why. With an investment, such as, let's say, properties, so real estate, you have an entity that's real, the property, and you have cash flow coming from the renter. And so anything that creates cash flow or has the potential to create cash flow is an investment. So the 7-Eleven down the street, if you purchased it, much the same thing, because it can create cash flow. Now, as people come in and they actually spend their money, and the money comes to the owners eventually. And investing in the stock market is much like that. So I prefer investing in a diversified portfolio of low-cost index funds. They represent real businesses with real, genuine cash flow. And so on aggregate, over time, the stock market growth long-term will reflect the aggregate growth of those earnings. The tricky thing about a cryptocurrency is that it doesn't actually have any earnings. And so there's no cash flow associated with it. So much like any currency, if you owned, let's say, $100 in every one of the world's currencies today, every one of the world's non-digital currencies, and actually we could take you back to 1800. So take you back to 1800, you buy $100 worth of every one of the world's currencies. And let's just, for argument's sake, say, it's worth $2,000. Today, that would still be worth $2,000, because currencies are what we call a zero-sum game. So there's no such thing as one currency just continuing to rise and rise and rise and rise. They float up and down within a band, but on aggregate, currencies don't make money. So it's really going to be interesting to see with cryptocurrencies. And you have, somebody like Warren Buffett, and I'm a little bit more aligned with someone like Warren Buffett or Jamie Dimon from JP Morgan Chase, who actually believes that it's much more of a speculation. So when you purchase it, you have to actually hope that someone else in the future is willing to pay more for it than you've paid. And so it's hard at this stage too to think of it as an actual currency of trade. because the prices are so volatile. Currencies aren't really meant to continue to rise. And so because they're not stable, it's kind of hard to price my MacBook Air at a certain price in Bitcoin, knowing that in the time it takes me to take my wallet out and swipe my Visa, that price has changed multiple times in several seconds. So I think that it's something that people should be very careful about. I would suggest not to invest anything more than you're willing to lose, just in case, because it doesn't have an underlying cash flow asset. So for especially a lot of young people listening to me right now are probably going to bristle at this idea. But when we're looking at long-term growth, I like to look at something that's not a certainty, because nothing is a certainty. But if I'm investing in properties and I'm investing in actual real businesses via the stock market, long-term growth will be there because it will reflect the cash flow of the entities that I'm actually investing in.
I love that answer, and I will elaborate as to why. I find that a lot of people are easily excited about short-term gain. They see the opportunity to gain like $10 on a $100 investment in cryptocurrency, but they may not have the systems in place to sustain it over a long period of time. And I see that come up often in fitness with the quick biohacks and all that stuff that comes up. And one of the things that we alluded to in a prior segment was just the lessons that we learned from the pandemic. And I shared about how I kind of diversified my streams of income, found more ways to monetize skills, and very similar to how you spoke to the value of like just owning real estate or having things that are like tangible. And yeah, like there is a ton of value to be had from being able to assess like value in different businesses on the stock market and being able to understand that more clearly. Have there been any resources that have kind of helped you along the way in your assessments of which investments to choose? Or have you used like, you've spoken about different choices that you've made as far as like group investments kind of thing. Can you speak to that a bit more?
Yeah, that's a really good question. And I read and continue to read just about anything and everything. And, obviously people can go out and try and buy individual shares of companies, which is something I did. When I first started out, I bought actively managed mutual funds, which is what most investors actually end up doing. So they get a financial advisor. The advisor recommends a mutual fund, which is basically a basket of stocks, a bunch of stocks, and a professional trader will trade those stocks, hopefully to increase the value of the mutual fund on behalf of the investor. So I started out doing this, and then when I recognized that there are inner fees associated with them, I thought then I would move towards buying my own stocks. So if I bought my own stocks, I didn't have to pay management expense ratios, these little hidden fees on these mutual funds, which incidentally can really add up. So compound interest can work both for you and against you. And if you're paying an extra 1% a year in fees, 1.5%, it sounds like nothing. But over your lifetime, it can be the difference between you having $500,000 and you having $800,000 or more. So that niggling 1.5% annual fee year after year after year can end up really killing your growth. So the idea of moving into individual shares is something that I did. And then as I learned more, I recognized that very few people can actually beat the return of the stock market by buying individual shares over a long time period. And our lifetimes are really the time periods that we should be most interested in, not how much money we'll make this week or this month. If we really want to be greedy, we need to look at what are the behavioral odds, what are the economic odds of us beating the overall market. So when I say beating the overall market, it's like, imagine owning, you could take the S&P 500 as an example, 500 large US companies. And when you buy a stock market index, you're virtually purchasing all 500 of those stocks. So the good, the bad, the downright ugly, you're just buying all of them. And the economic research is such that what's fascinating is that most financial professionals, most financial traders, actually underperform a stock market index over a 10-year period. And those that actually beat the stock market index aren't the same ones that beat it over the following 10-year period. And so for me, it was this realization that, wow, okay, so I can actually beat 90% of professional traders over my lifetime or over any 10-year period without any work, without doing any research, just by adding to a portfolio of low-cost index funds. So in the United States, that's really easy with a Vanguard Life Strategy Fund or a Vanguard Target Retirement Fund. In Canada, you can buy an all-in-one ETF, which is much the same thing. It's just an entire portfolio wrapped up into a single product. So, you set your money to go into this on autopilot every month, and you will beat 90% of the pros. It doesn't mean that you're going to make money every single year, because the stock market isn't like that. But over lengthy periods of time, and this isn't just like anecdotal, this isn't just observational. If you asked Warren Buffett or you asked any Nobel Prize winner in economics this question, how do I beat 90% of the professionals without any work? They'll tell you, oh, easy, just build a diversified portfolio of low-cost index funds. And so that's what I do.
I love that. There's a lot to take away from that, and hopefully people hear it and actually take some action on it. The second piece to this segment that I wanted to touch on is just the future of banking, and I'll kind of like explain more of what I'm getting at. What I've been seeing a lot is these apps where you can store, like you can get your paycheck essentially deposited to an online platform, no longer a brick and mortar bank with tellers or anything. It's all digitally held. Do you think that's going to be something that takes over banks like Scotiabank, etc., or do you think it's going to be another one of those speculative things?
I don't know. In one sense, the banks are doing that already. I mean, they're already halfway there with all of our online banking. I think that we do know about the security of the banks. And so it's going to be, I don't think something that businesses, for example, are going to adopt really, really quickly, because they do want that security. So even with brokerages, there's the big question of how secure is this particular brokerage? How secure is my money with it? And so there are a lot of people too that will weigh up different brokerages in terms of security. So, if there's something that's a bit more cloud-based, and it's brand new, it's untested, and maybe it will save people 1 or 2 basis points a year, but doesn't have the same kind of, I think, psychological and historical security. And I say psychological is a big thing, because you could prove that it's just as secure. But psychologically, how quickly are people going to adapt to that? When it comes to safety and loss aversion is huge with people. It's really big. I mean, I have a hard time trying to sometimes convince people to go with a firm like Vanguard. Put your money into Vanguard. They're the first. They built the first index fund. It's a great way to low cost, the largest basically mutual fund index fund provider in the world now. There you go. And a lot of people still will go, well, what about security? Like, what if Vanguard goes bankrupt, or what if something sketchy happens? So I don't think that what we're talking about here is going to happen overnight. Slowly, it might happen with a certain sect of the population, but I think it'll probably take a really long time to, if ever, to completely supersede the banks.
Yeah, well, I mean, I love that, because there's a lot that can kind of come up in a person's thoughts when it comes to their finances, and it can be influenced by the interest rates that are charged or the service fees that are charged. But at the same time, when you bring up the topic of security, that's something that we can't take for granted. The fact that we have reassurance that if something were to happen, like a bank is much more accountable than maybe like a cloud-based system, etc. But that essentially draws this segment of the show to a close. Are there any parting words of advice to someone that you would want to give when it comes to how to spend $100? Yeah. Here's one. To spend $100. This is something that your listeners might not expect to hear me say, because some of them are going to expect to hear me say, invest it. But you're asking me about spending it.
And here's what's fascinating. There was some really cool research done on giving the money away or purchasing something for somebody else with that money. So I'll tell you about a fascinating experiment that was done. And it was a physical test. And it was done for people where they were asked to hold out like a 5-pound weight. So it was a test in a subway. Here's a 5-pound weight, dude. Hold it out in front of you, and we're going to measure how long it takes before your arm drops. So your physical endurance gets fully fatigued. And so they have these people doing this. They're holding it out. They're measuring how long they can hold this 5-pound weight straight out. And then afterward, they let them rest, and they say, "Oh, that's really cool." And they too tell them, like, "We'll give you $1 if you do this, right? So here's your incentive for taking part in this little experiment. We'll give you $1." And so they give the person the chance to rest. They're chatting with them, and they give them the $1. And then they say to them, "Oh, you know what? If you want, you could donate that $1 too." And they had a charity there, and you put it in a charity jar. And then they let the person rest and ask them if they want to try it again, just for free, like another shot at it, just to see if they could hold it out longer. And the people that ended up keeping the $1 ended up being able to hold that 5-pound weight about the same amount of time as they did previously. A little bit less because there was a little bit of fatigue residually. But the people that actually donated the $1 on aggregate held that weight out longer. So it's a weird thing. Generosity, it's like something it's ingrained and it's deep into our DNA. Like, we're actually meant to be helpful. We're meant to be generous. It actually makes us feel pretty good inside. And I'm not saying like that $100, donate it to some nameless charity. I'm saying do something kind of fun with it, because research suggests something called pro-social giving gives us a far better bang for our life satisfaction buck. But when we can actually see the recipient, and it doesn't have to be a charity. It could be a gift that you're giving a friend, or it could be something you're helping somebody out with. And it can be a surprise. So here's something that I find fun. One of the things I often used to do, and I mentioned this in my book, Balance, is I would be in a restaurant with a friend, and we would be scouring the restaurant trying to figure out whose bill we were going to pay. And we would like spend half our mealtime trying to figure it out. Like, "Oh yeah, that guy over there, he looks kind of cranky and he's really mean to the waitress. Wouldn't it be kind of fun if we just paid for his bill?" And he didn't know. So we would bring the server over to us, and we'd say, "Hey, look, we're picking that young family over there. We're picking that old guy over there." And we would say, "Just bring us their bill and we'll pay it, but don't tell them. Don't tell them that, just say, your bill is covered." So, to us, talking about a fun way to spend $100, like you and a friend to do that, no one expects that. And you impact them forever, because Chris, they'll never forget that. Like if you and I went out and we got burgers and beer, and the server told us, "Yeah, Chris, Andrew, your meal's been covered by somebody in the restaurant," you and I would never forget that. We would always wonder who did it. And when you're actually the giver, it is just so much fun. A little bit of mischief, but it's also so much fun. Like, we're meant to be givers.
I love that. And it's something that I've seen amongst successful business owners that are local to Edmonton. During the pandemic, I actually had my Easter dinner covered by a local business owner who to this day is anonymous. Like, I've spoken to him on Instagram, but I don't know his first name. I've had coffee with the guy, still don't know his name. So the impact is incredible. And successful people know the value of that. So I'm hoping that people kind of take that advice and roll with it. But we're going to head on into our next segment. So thank you, listeners and viewers, for tuning in, and hopefully you check us out for the next one.